The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Wednesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got about 24 minutes to go until the opening bell, and you got some retail sales this morning. We got producer prices. We'll jump right into the market, and we got the S&P right now. You see the volatility on that 830 number for retail sales. We'll get into that in a moment. Why not? Let's pull up the headline number, actually, before we break down the charts. The headline number, decreasing 1.1% in December after a downwardly revised 1% drop in the prior month. Excluding gasoline and autos, retail sales falling 0.7%. Those figures are not adjusted for inflation. So even not adjusted for inflation, those numbers falling in the month of December and a 1% revised drop in the prior month for November. So you get back to the charts. There's your volatility. We spiked to 4,032. We're back to 4,014. S&Ps. Outside of that small little spike at 830, we're pushing pre-market highs right now, up almost 0.5% at 4,028. NASDAQ 100. The consensus being, right, what? The economy is slowing down. That's a good thing for the Federal Reserve and their rate policy going forward. That's the reaction, at least for the last 37 minutes since we've gotten those numbers. We'll see where we go today. NASDAQ 100, you're up by 0.7%, 11,706. The Dow right now up by 0.2%. The Russell up by about 0.5%. How about crude continuing to catch a bid? Crude up $1.19, 81.64. One of the things in the data that we're getting this morning helped immensely by gasoline prices going down. Well, folks, a lot of people have been talking about the gas may be going up, and we'll leave it at that. We'll see where they go. But crude today up $1.21. We're going to talk to our man Teddy Cakestad at 40 past the hour. Always a great interview. Check out the Tiger Forex report, folks, at TFNN.com. We'll talk to Teddy about Forex, of course. We'll talk to him about notes and bonds, the dollar. Always have the conversation about crude. Interesting as we approach. I mean, you check out this chart, right? We're pushing the upper boundary levels that we saw December 1st. You saw those levels back end of December as well as to kick off the year, just above those levels recently with an 81 handle now on crude. How about gold? The run's not over just yet, man. Gold up another $15 on the session. That's 0.8% higher. We put it back to a 15-minute chart. You see the acceleration from early this morning. We had an 1,800 handle. We're up to 1,925. And how about notes and bonds, man? Higher price, lower yield, extending on those numbers. You zoom in on the action. We had some action last night. You're higher again this morning. And you have the 10-year right now. I think we're at 3.44. Is that right? I'll have to check it again. Last time I checked it, 3.44% the yield on the 10-year. We jump over the VIX, as you may expect. The market fades higher. The VIX fades lower. 18 handle with an 1878. The lows of last Friday, 1801. Now, man, you take a look at this thing. You go back the last year, and you are approaching levels, folks. We did not see an 18 handle, okay, which we got on Friday. This is a daily. Yes, got on Friday. We now have an 18 handle today. Did we get there? We got 1895 was the low in December. 1912 never made it to 18. Did we get there? No, 1980. Okay, so we didn't get an 18 handle from April to December. We got it for a single day when you got to 1895. That's how much hot volatility. The low there, 1845. You got to go back to January 13th of last year when we got a 17 handle, just to show you how low we are for volatility premium versus the entire last year in this market. All right, let's jump into those retail sales. No, before we do, let's jump on currencies. Dollar index. Of course, we got some action this morning. Check out that drop, man. From almost 103 to 101.7, you're down more than a full point from where you were at 101.70, I think. What did they do? Yeah, we had some action in Japan last night. That was the move at 9 o'clock. And look at the give back, man. The yen, this will be interesting to talk to Teddy about at 40 past. Spikes to 131.50, and you are now back below whatever was going on at 9:30. It's a worldwide market, folks. What's happening here is influencing what's happening in Japan, in Europe, etc. That's why that conversation is always so interesting, talking with Teddy for those 9 minutes at 40 past. And I think I have the article pulled up. Let's see what we got going on. Where are we? Thought I had a Japan article. There it is. I thought so. Jolts financial markets, but risk a bigger shock. So getting into it, unchanged decision from the Bank of Japan gave global investors a modest jolt, leaving the bigger shock of a future policy shift hanging over the markets. Yeah, so they stand pat, and they were thinking by some that they were going to jump into the foray, that they would normalize policy as inflation accelerates. It's a temporary setback to bets on a stronger yen and a bond sell-off. As analysts say, it's still a question of when, not if, the central bank exits its yield curve control policy. So big action in the yen. That's driving some of the dollar action today. That's driving gold in particular for sure. But let's jump back to the retail sales number. So retail sales this morning, as I mentioned, decreased 1.1% in December. And this is interesting where that's not adjusted for inflation. So even if you were doing equal numbers, right, you could see an increase of 6 or 7%, 5%, 4%, something like that, and you would just be trading the same products at an increased level of price to keep up with inflation. But no, even with the increased prices, overall retail sales down 1.1% on that number, and that's following a 1% down month for the month of November. Median estimate was looking for about a 0.9% decline, so bigger numbers than they were thinking marginally. 10 of the 13 retail categories fell. Motor vehicles, furniture, electronics, the value of sales at gas stations slumped 4.6% as prices steadily dropped. Again, this is for the month of December, folks. It's going to be February in 2 weeks to show you how delayed this data is that we're actually getting, though. Imagine, this data includes data for December 1st. And it actually includes data for November 1st because they talk about the revised month prior. If you go all the way back to the beginning of the month, it's just very extreme delayed data. The year-end slide in retail sales sets up what economists expect to be a softer 2023. Yeah, we'll see how that goes. They talk about the savings rate in there. Okay, let's jump to wholesale prices, producer prices. Wholesale prices fall 0.5% in December, much more than expected is the headline over there. They were looking for a 1.1% decline was the number. Producer prices, they measure the final demand. Prices across hundreds of categories declined 0.5% for the month. Market was only looking for 0.1%. Some pretty decent numbers, right? Coming out this morning, you got slowing retail sales. You have producer prices going down much more than the market was looking for. Now, producer prices don't always translate into consumer prices, which is why it's much further down the line in terms of important economic data versus a CPI or a personal consumption expenditure number. But the sharp drop in energy prices, again, helped bring the headline inflation reading down for the month. The PPI's final demand energy index plunged 7.9%. Within that category, wholesale gas down 13.4%. The final demand food index also fell, declining 1.2, nothing compared to what's going on in gas. So keep that in mind. Okay, now I've mentioned it that's why the Fed loves the core numbers so much. Okay, but just taking a look at the crude prices, man, folks, it was a one-way trip down, and the low was the middle of December, the month we just got. You can make the case that we've been bouncing since then. Now, the low that you got on January 5th, this is the price of crude, zoom in on the action, was about 72.46, but you can see higher highs, higher lows since then. We're trading at 82 bucks. Higher gas going to be contributing probably to those numbers going forward. Stay tuned, folks. We got a lot to talk about. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years years' experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We have the market right now jumping around. We got the S&P's up about 15 points right now. You got the NASDAQ 100 up 78. Jumping back to some of the stories I was talking about. Wholesale prices real quick. Talking about the gasoline part of things as I was. So you have gas within that category. Talking about the PPI's Final Demand Energy Index plunging 7.9%. And within that category, which is the Final Demand Energy Index of the Producer Price Index. Got to keep track of all this stuff, man. Wholesale gasoline prices fell 13.4%. Now, inflation readings ahead could be less certain. We're all getting a lesson in terms of what data matters and what data doesn't, especially in the context of inflation, because we haven't had to deal with this in a generation, folks, and in terms of how that relates to the Federal Reserve interest rate policy, okay? And I give you that the PPI is not the CPI, for instance, okay? It's not the PCE. It's not the non-farm payroll with everything in there. It's not retail sales, which is a big number as well that we got this morning. Excuse me. But what is interesting is that where you have gas prices already this month, January 18th, as the cost for a gallon of gasoline is up already 21 cents from this time last month, and crude oil prices are up about 1.6 so far for January. And what I'll say to you, even on this chart, folks, for the price of crude sitting at 81.95 as we inch higher, we're at relative lows going back for the whole year. And you take a look at the 3-year weekly, man, yeah, you're talking about higher prices dramatically. Excuse me as my phone rings. Okay, what else I had pulled up? I had that article that we're looking at as I was coming into the break. And I had the Bank of Japan. So here's the chart I wanted to show. So to pull this back a little bit, a lot of analysts are seeing it as a pause on the road to further policy normalization. And I'm going to show you the chart that illustrates why these analysts have to be right. It's a matter of when the Bank of Japan will do this, not a matter of if. All right, and I'm only going to say a couple more things because we'll talk to our man Teddy Kegstad in about 20 minutes when we bring him on the program. But it's a pause because check out, Japan yields have room to catch up. You talk about room to catch up, man. You can't even see the Japan 10-year yield on this chart. Right there. There it is, folks. Basically sitting at 0. You see the U.S. You see Australia. You see Germany even now above 2%. And you see the U.K. at what, 3.25%, something like that. Bank of Japan, they're not willing to budge just yet. and eventually I would say that has to catch up, and you're seeing the market react to that a bit this morning. But man, that's quite a chart, right? Yeah, as they leave their negative interest rate at 0.1 negative, that is negative 0.1%. Can you imagine if our Fed right now had a negative 0.1% interest rate? Now, Japan doesn't have the inflation I think we're dealing with, but they are dealing with inflation. And we'll have to maybe get those numbers as well. I wonder if they throw them in there. No. Okay, let's jump around to what else we have going on. We'll talk about oil. Why not? Oil extends gains on bets that Chinese demand will strengthen. It'd be pretty interesting if China just basically allowed everybody to get COVID and they bounce back. That's the rhetoric you're hearing. We'll see if it plays out. But nonetheless, oil pushing, it's above 81. It's almost above 82 right now as I speak, building on the modest gains of yesterday and last week's jump of more than 8%. And you check out that acceleration. It's been a one-way trip from January 4th, January 5th. Two wild cards dominate the 2023 outlook. And this is some analysts. The well-supplied oil balance at the start of this year could quickly tighten, however, as Western sanctions impact Russian exports. There's so much going on in this oil market, man, but nonetheless, we're at $82 right now. We'll talk about that one a little bit later. We got the bond market 60-40. What else are we going to talk about here? Let's see what we got pulled up. Well, let's talk a little bit of Microsoft as this news. So Microsoft's going to be laying off 10,000 employees as the software maker braces for slower revenue growth. They're taking a $1.2 billion charge tied to lease consolidation. In October, Microsoft called for the slowest quarterly growth since 2016. Now, they've been putting up some pretty staggering numbers across the board, but nonetheless, those numbers are out pretty much this morning, I think, in terms of the exact numbers. We jump over to Microsoft shares. I was talking a lot about Microsoft yesterday. With their purchase of a stake in OpenAI and ChatGPT, it'll be interesting to see how that shapes things, but they're going to be spending $10 billion for that, and that's a longer project, to say the least. Let's see how some of the FANG stocks are trading this morning. Google shares up a bit to 93.10. We jump over to the big dog, Apple, 137. They're up more than $1 for Apple shares this morning. Amazon shares on retail sales, they'll be impacted in that. Amazon up $1.23. You're going to see a lot of green across the board. And 10,000 employees, folks, for how they've grown over the last few years, not really that big of a deal in full context. All right, what else do I have pulled up here? Let's see. You have the 60-40 and talking. Okay, let's just jump around to some of the retail stocks as we come in. You got Macy's shares today sitting at about 23.02. You jump over to Walmart shares. You see a lot of the stocks have been up, man. Walmart shopping around this week. You're going to open about 10, just marginally higher for Walmart shares this morning. Target shares going to be marginally higher as well. Let's see how some of the airlines are trading. You got American up a bit. Be interesting to see how they go forward if we do get those rising gas prices. Man, these airlines, quite a trip. American especially. I mean, you're pushing, 40% higher in the span of less than a month? Yeah. Delta Airlines up to 38 from 32 as they are through their earnings. Look at United, man, 37 to 51. So these airlines. Let's see how some of the cruises are trading. Okay, so this one's interesting. So check it out. I've had this channel, been talking about it on my chart probably for a year, folks. It's very simple. Let's even put it on a daily and zoom it in just on that channel. Oh, you want to see something cool? Here's something cool. You put this thing on a weekly, okay? This is Carnival. Let's see if we go back even further on a monthly and zoom in there. So check this out, right? An ode to our man, Bud Rolfs. Love him, okay? Because we're talking about channels. Let's see. Now, this is the channel line. How cool is this? Because this is the channel line that Carnival has been in basically since June of 2021. And we are jumping towards the top boundary line of that channel line, man. And I remember talking about, look at how clean this was in terms of even getting down to 611, right? You've run now to a price of almost $11. And that's from October 10th. You've made that run. You're bumping into the upper boundary of this channel line. But what's so cool is if you have this channel line on your chart, okay, and again, I'm going to bring it back on the monthly to get the full collapse from $72 here. All right, but watch this, man. You extend this line to the left. You extend this one to the left. They're not going to be exactly parallel when you go that far. But you can see, how cool is that, man? that you basically were in this channel line from the highs back in January of 2018. What did COVID do? COVID exacerbated the fall. Where did you come back to? You came back within that same channel line, and you've been in it ever since, and you're coming up to that line right now. How cool is that, right? So be careful if you're in some of those cruise ships, man. I saw some article for the cruise ships. Let's pull up Norwegian in the same. Yeah, Norwegian, man. Whew. I don't know. Just chopping around near the lows for this equity. At least you're not in the downtrend channel. Look at that. So that's another one. Look at that. Wow. There was the buy, man. Look at that. So look at that. You're in that channel line since pretty similar time, June of 2021. But what does Norwegian do? I remember talking about this, man. You break out of it, you come back, you nail that channel line at the beginning of this year, and already, what are you up? 30% in the last 2 weeks on that right off the channel line. Interesting. We'll talk a little bit more about the cruise ships. So we'll be back for the open, folks.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. You're looking at an S&P up about 12 points right now, trading at 4,021. We zoom in on 5-minute action. We were as high as almost 4,030 coming in right at about 9 o'clock. We've trailed a bit in the last 30 minutes or so. You get the NASDAQ up 78 points. Let's jump around to some of those currencies, man. We get some huge currency moves. Dollar index, 101.59. Folks, if you haven't joined the Tiger's Den yet, please check it out. Great conversations as usual in the morning. My dad in there, though, talking about this morning. pulling up his quote. Where is it? There it is. His take, my take, this is him talking. And I mention it because, man, we're getting some action in the dollar index. That's what he's talking about. The price won't hold today. The S&P 500 futures should be up 50 with the dollar breaking the lows. So we'll see where we go from there. But check out the den, folks. A lot of great takes. And, man, look at that dollar, right? You talk about an acceleration. It's just not stopping right now. You get the dollar down 83 ticks to 101.55 right now. Part of the reason you've had quite the run in the gold contract up to 1927. And yeah, let's jump around to some of the FANG stocks. You jump around to Apple, up about 1%. You got Microsoft with layoffs, up about 0.6%. Google shares this morning, up 1.2%. We jump over to Meta shares. Meta, up about 1%, and that's going to jump us into our next story. If we can pull it up, do we have it? There it is. So we've been talking about VR, AR, my Oculus Quest 2 glasses, virtual reality headset from Meta. Apple is delaying their augmented reality glasses, and they plan cheaper mixed reality headsets. So this is talking about years down the future, and it's just showing you how hard it's going to be to crack into this technology. You have Apple, a company valued at nearly $2 trillion, and they're saying, you know what, this stuff's harder than we thought. We can't spend enough money to make it happen in the timeline that we thought we could, so we're going to push things back. So what they're going to do is they have a mixed reality, I believe, headset coming out this year. Yes. So they are planning to unveil their first mixed reality headset this year. So that's going to combine the virtual reality, which is what an Oculus Quest is, and then you can have augmented reality, right, which is you're wearing the headset almost as glasses so you can see the outside world, and meanwhile it's overlaying, augmenting, adding to reality with something in there. Right? They had originally hoped to release their AR glasses after the debut of their mixed reality headset, okay? But that part of the plan's on hold. Instead, what they're going to do is they're just going to push out a lower cost version of the mixed reality headset as soon as 2024 or early 2025. So that means they're like revolutionary headset, potentially the one that they really thought that they were going to come with, okay, isn't going to be ready until after 2025, to put it lightly, okay? Now, the shifting plans underscore the challenges Apple faces in pushing into a new industry. The company's betting that AR and VR devices could be a major moneymaker. Mr. Zuckerberg making the same bet to the tune of tens of billions of dollars. Technical challenges of producing a consumer-friendly product has bedeviled much of the tech world, and Apple's initial dream of offering a lightweight pair of AR glasses that people could wear all day now appears many years away, if it happens at all. So those were the glasses, and that was going to be kind of the record breaker, you know, the revolution, as in it probably will happen at some point, folks, where you are just like wearing glasses. You don't even have a phone, right? You wear glasses. There's some kind of interface in front of your eye that tells you everything, almost Terminator 2 style, where you're seeing an interface. But that's probably going to come at some point, to whatever degree it comes, okay? But it's a long way away. So what are they doing? They're just pushing out headsets, just like Facebook, until they do. The one they're coming out with this year is going to be around $3,000. So that's why they're going to rush the cheap one next year or 2025. I think the Oculus Quest 2 is like $400 right now. I think it was $300 when I got it one Christmas ago, 13 months ago approximately. The one they're coming out with right now, remember, that's a mixed headset. So they're going to have some augmented reality. They're going to have virtual reality. And the $3,000 stems from 10 cameras. Yeah, advanced high-resolution displays, 10 cameras, sensors to determine where a user's looking. And then you have M2 processor, dedicated chip for handling AR and VR visuals. So it's interesting, that holy grail, right? That's why Zuckerberg is spending so much money, folks, because you see even a company like Apple pushing things back in a big way. Because think about it. Apple doesn't want the Oculus Quest 2, because we've talked about it in the den. The den. They don't want the Oculus Quest 2 because I barely use the Oculus Quest 2, right? It's just another video game. They want the device that's going to change everything, like the iPhone, okay? Like the iWatch. You can make the same case in terms of how they revolutionize smartwatches and how many of those they've sold, how that intertwines with Apple. Well, I imagine, folks, there's going to be something that you might be able to look through that will combine those interfaces, will combine those displays, will augment reality, And that is something that is very far away. Now, Facebook is diving deep into the virtual reality, the metaverse, okay? Apple, a little bit different plans where they want to control what? They want to control another device that you use on a daily basis. But you can see that one going to take years. But guess what? The holy grail for virtual reality for Facebook, that's going to take years too. Be interesting to see what Facebook comes out with in terms of their headset that's going to compete with Apple's high price number. Okay, jumping back to the markets and basically just chopping around where we opened. You're trading at about 4,024 right now. I mean, I'd say the same thing, folks. I'm surprised the market's not higher, other than the fact, man, we got a lot of optimism priced in right now. That's the other side you got to keep track of on this. You pull things back to a 5-year weekly, just zooming in terms of this acceleration, where we are. Folks, you're at prices that we were trading at in almost May of last year. Not that bad in terms of where you are with this market when you still look at the inflation numbers we have. Yes, we may have peaked, but the goal is to get back to 2%, folks. Remember that. The goal is to get back to 2% inflation, and we'll see if we go there. Okay, jumping around to one of the other articles, talking about jobs. Here we go. 2.6 million. That's the number of employees that should be in the workforce if they had not left the workforce for the participation rate. 2.6 million people, UNDERV's quote-unquote star Harvard economist. So the numbers they're looking at here, okay, behind the 5-decade low U.S. unemployment rate of 3.5%. Not sure that's how you calm inflation. That's quite a synopsis, and it's exactly correct. 5-decade low U.S. unemployment rate of 3.5%. 2.6 million person mystery. That's adding to the 3.5%, okay? And the reason why is that's roughly how many more Americans should be working or looking for jobs if the economy's labor force participation rate was just the same as before COVID-19. It's not outlandish, folks, okay? Same exact participation rate prior to COVID, and you'd have 2.6 million people looking for jobs in the workforce that are not currently. Well, where are they? They are in low-cost jobs in high-earning areas. The data highlight how awful, let me pull up the exact quote of where these people are to where are these workers? The employment rate for the poorest quarter of the workforce was still 13.5% below pre-pandemic levels at the end of 2021. You have total U.S. employment in the black here. You have yellow with low-wage unemployment, okay? And we're going to talk to our man Teddy Kegstad, and then we'll finish talking about this at the end of the program. But it makes sense when you look at it, folks, in terms of where these people were, in terms of low-wage areas around where? Areas like Back Bay, Upper West Side. We'll be back with Teddy, folks.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We have the S&Ps right now up about 15 points. Let's jump over to our man, Teddy Kegstad. Folks, you can check out Teddy's work every Monday. He puts out a new issue of the Tiger Forex Report right under the newsletters tab on the front page of TFNN. He puts out updates when warranted. When you subscribe, like any newsletter at TFNN, folks, you subscribe. It's $97 for the month. Okay, but you come with a 30-day money-back guarantee. So you don't like it, at the end of that 30-day period, you cancel. We'll refund that $97. You get the newsletter for a month. You also get a 60-minute webinar, Forex Strategies and Fundamentals, what is behind the Tiger Forex Report. He breaks down the markets. He breaks down the variables that he looks at for the pairs. It's a great service, folks. It's a great webinar. Check it out. And let's just jump into it as we got quite a day, Teddy. Good morning, man.
Good morning. Where do you want to start?
Let's start with the yen. What do you think of the yen? As I had to piece it together this morning as I woke up. So the Bank of Japan staying pat. Is that the deal?
Well, they are right now, but we've been talking about this now for the past couple of months. You have a new prime minister, and now you also have a new Bank of Japan chairman coming online in a couple of months. That's when they're going to do stuff. They're going to wait for the new guy to come in, most likely. They're in no hurry. It's not like they're in a hurry, considering how long they've been where they have been, Sure. So, but overall, this is something we've talked about. Even my predictions for the year was, the Japanese yen is going to be definitely probably a very strong currency versus the dollar, So, and the dollar index, like right now, today especially, you have all the currencies crushing the dollar, you have new lows in the U.S. dollar, Swiss, you have new highs in the Australian dollar, U.S. dollar. The pound especially, like that balloon underwater rally today, like going into those highs right now where it's at, that's very impressive, So you got to remember that the euro, it's really just fluttering. That's the one that had been leading the charge on the dollar index for the past, especially week. Going in today, if you look at it, it's just floating right below the highs that it hasn't been able to breach for the past few sessions, So that's pretty much exhausted, I think, and that shows that, I told you that this is the year you're going to see a lot of divergence, and I think you're going to start to really see that now. The yen was up U.S. dollar yen was up very strong today, and then all of a sudden it fell apart, because the market's buying into this reality that the Japanese are actually going to start doing something. Negative interest rates those days are going to be over, So now they're not going to be as aggressive as our Fed or other central banks around the world, but that's irrelevant. The fact that we know that they're going to come off their lows, that's a big deal for the global investment community because it's stronger for the Nikkei, it's stronger for their bond market, so that you're going to also have a lot of Japanese investment. You got to remember the Japanese invest globally. A lot of Japanese are going to be investing in their own markets too because they're going to expect to see a growth for sure, especially in the stock market there, and also in their economy. I mean, their inflation is not nearly what we've been dealing with, but we've talked about that already for months, about how, where we have rampant inflation, things aren't like that everywhere in the world, especially in Japan. They actually were very isolated for the most part during 2022 and even 2021, but now the global inflation is something they're not insulated from that. And I think that's what you're seeing as far as where that inflationary growth is in Japan, but as the yen gets stronger, and I think it will versus most other currency pairs as well. Like, I don't think it's just going to be a US dollar yen trade. I think you can take the yen versus most currencies, and over the next 6 months, especially after this new Bank of Japan chairman comes in, I would not doubt that the market itself is going to be betting on the stronger yen, period,
Yeah, I mean, you look at the chart. I had it up earlier, and I just pulled it up right now of the yields, the 10-year yield of Japan versus U.S., Germany, U.K., Australia. Just remarkable that it's sitting basically at negative prices still, as we are, even Germany, above 2%, but we're chopping around, as we know, about 3.5% the rest of those countries. Just remarkable when you take a look at it in terms of where we are. What did you think of the numbers this morning? Just because we got some retail sales, we got some producer prices, declining retail sales, producer prices dropping as well. What did you think of those, tying into, obviously, the move in the dollar, man, kind of influencing some of the action for sure?
Okay, well, the drop in retail sales, I think that's pretty easy to figure out. I mean, we've had so much inflation going on over the past 2 years. People are out. I have to say, I think people are pretty much exhausted, not just from the inflationary environment. I think their pocketbooks are as well. I mean, I remember how the holidays were, people were out, but they were really only out really on like Christmas and Christmas Eve, New Year's Day. There wasn't the weekends would have some business at the shopping malls, but overall people weren't really out, And like this past Monday, we had Martin Luther King Day. You would think with the kids out of school and whatever, people would be out running around doing stuff. And I have to say, I went out to Office Max on like 11 o'clock on Monday to go pick some stuff up. And I pull up in the parking lot, and there was nobody there. The Best Buy next to it, I mean, there was like no cars in the parking lot. And I'm looking around like, okay, I could see where people are sleeping in, but there was nobody. And all day it was like that. There was no traffic, So people aren't going out and running around. Like, they're not aimlessly doing that. And I think also that their spending habits are starting to change. I mean, it doesn't take a rocket scientist when you go to the gas pump, and I think people are afraid of higher gas prices, and that's coming as well, I mean, and you look at their expenses, you can say that, the Fed was saying inflation was transitory months ago. Now we know that they don't say that anymore. But the reality is the average person, I think, is under a lot of strain, and especially look at all the people that have probably bought cars in the last year and a half too.
Yeah, it's tough.
I mean, you want to talk about getting crushed,
Hopefully you didn't buy a Tesla, but go ahead.
Yeah. Oh well.
That price reduction. That's really what I'm talking about, folks. That price reduction. Sure. How about that one, right? I was reading a story about the poor people, folks, that bought it over the last couple of months. One guy was supposed to take delivery in January, Teddy, and they called him in December and said, "Hey, guess what? We can actually get you that car December, right around Christmas." He said, "Oh, fantastic." He took delivery, and then they lowered the price in January when he was actually going to get the car, and they're just like out of the woodwork. But yeah, cars, everything. Let's jump to crude if we can. You talked about gas prices, man. We're above $82 as I talked to you, up almost $1.75. And yeah, I was talking about earlier in the program, part of the numbers, the reason why they're coming down are gas prices. Already versus last month, we're up 21 cents versus this time last month. And it feels like we're almost even on our way even higher than that. But that's the number in terms of where we are already, almost 25 cents higher. What do you think of the price of crude?
Well, I think the price of crude is going higher. We have a buy signal that was triggered yesterday after with yesterday's close. You have a reverse head and shoulders formation. So I think we have a solid base bottom. We set a low in December, and I think that was the head, and now we're going to start trending higher. We hit the this last pullback, with this higher move low. If you think it as far as like in a wave theory, you had your first wave that began. We have the first retracement now. We're in wave 2. The wave 3 is going to be the big wave, and that should take us definitely back, I would say, around the $90 mark or even more within probably the next few weeks.
What's your take, Teddy, on China in general? I know there's a million variables that go into crude especially, but a lot of the talk about China. What's your take of China, open it back up? Because now all the rhetoric is, they might be over the hump already, and I'm surmising, of course. But what's your take on how China comes into that crude price?
Well, I think short term, that's definitely a demand. That should drive demand, I would think. At least in the short run. Yeah. Especially because Green New Deal is something that the Chinese really don't care about.
No.
Sure. Electric cars, that's not happening.
Yeah. Well, Teddy, I appreciate the conversation, the time as always, man, and I look forward to talking to you next Wednesday, man. You have a great week. We'll talk to you Wednesday.
You too, Tommy. Take care. Thank you.
Okay, take care, folks. Check out the Tiger Forex Report. Interesting action every week on Monday from Teddy, and we'll be right back to finish up the show.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all Tigers and Tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets pretty much where we kick things off. Just chopping around between about 4,020, 4,025. We're trading at 4,023 right now. The S&P is up by about 1/3%. You get the NASDAQ 100 up 0.7%. Let's take a look at some of those FANG stocks. Apple shares trading higher by 1.2% this morning. You got Microsoft. They're laying off 10,000 workers, up about 0.2%. Amazon shares up 1.4% right now. Netflix, their numbers tomorrow, up about 0.2%. We'll jump over to Disney, streaming, up about 0.3%. And let's jump around to some of the companies that had their earnings. We had United out with their numbers after the bell last night. Strong numbers. They're up 1.5% right now. Let's see. We had Interactive Brokers. What are they? IBKR, I think. Yeah, they were up with their numbers as well. Up we'll call it 3% in the positive. I think Levi had negative numbers, correct? Yeah, Levi Strauss, they're down about No, they got downgraded. Excuse me. No numbers. Yeah, they were lower this morning. What else do we have out there? Pull up United? Yeah, we pulled up United. Yeah, IBM got a downgrade out there. Oatly. Which one's that? OTLY? Watch out for this one, folks. Be careful. They got an upgrade, I guess. Yeah, you're up 4.4%, but look at that. You just gave back almost 10% from where you were on the open right now. And you want a rough chart. There's a rough chart for you, folks. This thing got pushed out to the public at $22. You trade up to 29, and it's a one-way trip to single digits. And yeah, quite a percentage return if you somehow peg a low of $1.28. But be careful of that equity, man. And let's check out Tesla shares. Speaking of being careful, Tesla up 1.8%. Now here's what I'll say, folks. I put this Fibonacci number on here a while ago. Be careful at about 142. That's just a 382 bounce. Even 163 is just a 618, and that's just of the run lower since December 1st on Tesla shares. All right, folks, thanks so much for tuning in. Stay tuned. We have the S&Ps up by 14. We have the NASDAQ 100 up by 70. Some decent retail sales to the downside this morning. You got decent numbers for the economy in terms of slowing things down for inflation. And with that, we got the 10-year, man. You got the 10-year up more than a full point at 115.22. Stay tuned, folks. Basil's up next. We'll talk to you tomorrow. Have a great one.